Great news! Inflation came down to 2.7% in Canada, and everybody is going YOLO. Like Chrystia Freeland put out this tweet this morning telling us that this inflation reading has been the fourth consecutive reading below Bank of Canada's target range. This is great news for Canada. And look at my response above. Is it really good news? If we lost 20% of our purchasing power because of the inflationary policies, is it really good news for Canadians? I let you be the judge. So what's happening here? So basically, inflation is coming down for sure. There's no doubt about that. Right? If you look around in the US, in the UK, Eurozone area, even if you look at the shadow stats, which is an independent organization comparing inflation based upon 1980s formula, because government changes CPI methodologies all the time. Okay, so they can remove stuff, they can add stuff in the CPI basket all the time to kind of manipulate the number. If you follow these shadow stats, their way of measuring inflation is consistent going all the way to 1980s. And according to that trend, we can see that the inflation is still really coming down. Okay, but why? That's the question. The reason is the consumers don't have discretionary purchasing power anymore. Okay, they're not buying stuff that they don't need. They're buying stuff that they need. Okay, so when you look at this chart, which is the Stats Canada's number, and you can see that, household operations, furnishing, equipment, clothing, footwear, that's the only thing that is going down. The rest is still up. Like if I'm tight on cash, I don't need to buy new clothing. I don't need to buy a new pair of shoes. I don't need to buy another couch. But I need to buy food. I need to pay rent, right? I need to put gas in my car to go to work. So you can see the type of items which is going down versus the stuff that is still going up. And there was a lot of debate about the food inflation this morning, and people were saying, "Oh, food inflation is coming down. Don't worry about it. This is good news." But when we look at the food inflation, yes, some items are coming down. Let's say fruits, food preparations, nuts, seafood, fish. But the rest is still going up. So it's basically averaging out. Okay, so yes, inflation has been on the decline, but it has been going on above 2% in the last 3 years. So in 2021 March, we saw inflation spiked up, above 2%, and it went all the way to 8% in June 2022, and since then it has been coming down sharply. And then it has been hovering around 3, 3.5, 2.7, that number. The way inflation is measured is year over year price difference. Okay? If the inflation has been going on for the last 3 years, which means if you compound the overall price appreciation, then to some extent, some prices have gone up 100%. Okay? Is it really a good news? I don't think so. But because Chrystia Freeland is trying to manipulate this, trying to sell this as a political narrative, people will buy, unfortunately. But what's going to happen? So a lot of people are predicting that the Bank of Canada is going to cut rates. Maybe they will, 0.25%, 0.5%, who knows? But does it really help you? Okay, so the people who are complaining about interest rate are the stretched homeowners who have taken a lot of debt. They went YOLO on 2022, 2021 buying spree perhaps. They're the one wishing for it, because when Bank of Canada cuts rates, and if they are on variable interest rate mortgages, then of course their monthly payment will reduce and their amortization may come down a little bit. But if you're on a fixed mortgage rate, then it doesn't change anything for you. The fixed rate mortgages, they work as per bond yields. The fixed rate mortgages are, around 5% right now. They're way below the variable interest rate. So that doesn't change anything for fixed mortgage holders. It's only going to impact the variable interest rate mortgage owners. Plus, of course, there's a big impact on the commercial and real estate side and overall commercial lending. That's of course another story. But cutting interest rate down by 0.25%, by 0.5% doesn't change anything. Okay, and there is a very less chance that we will go back to 3%. Very less chance, unless the stuff hits the fan really, and we have unemployment goes up to 8%, and we are deep in the recession, then of course the Bank of Canada needs to stimulate the economy really, really hard, and then they may go to 2% or as well. Who knows? But without reducing interest rate, if the consumer spending is declining, that's not a good sign. That means the economy is grinding to a halt, and we are most likely in recession. Okay, so that's not a good sign. Okay, that's not a good sign. This means job losses, bankruptcies, and all that stuff. So let's see what's going to happen on June 5th, which is the next meeting at Bank of Canada, where they will announce their monetary policy review. But I think 0.5%, 0.25% will not do anything. It will maybe stimulate some of the buying sentiment in the market, but overall, it doesn't change anything. The prices that we have seen at the shop, it's not going to go back to 2019 levels, guys. Okay, that has gone up way, way, way above because of the compounding effect, and we lost our purchasing power because of the inflationary policies by this government, which has printed a ton of dollars in the market, which has eroded our purchasing power. Anyway, you let me know what you think about that. Put your comments down below. Let me know what's your strategy to protect your purchasing power, and how are you hedging against these inflationary pressures as well as the recessionary pressures. If you like this video, give me a thumbs up, subscribe, and thanks for watching, and I'll see you in my next video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.